Hi, I'm Joe Markley. I'm speaking to you on the afternoon of Tuesday, February 15th. Tomorrow is the big budget day when the governor proposes the entire budget, but today he released just his tax increase part of the budget package. I think his thinking is he'll get this tax increase story out of the way today, and then tomorrow the focus will be on the budget as a whole. Probably a smart political strategy because he knows how unpopular these tax increases are going to be and how unpopular they deserve to be and how unpopular I will try to make them, as a matter of fact. Starting with you folks today on this tape, let me talk a little bit about what he's got in mind for picking your pocket. We've got, in fiscal year 2012, almost a $900 million increase in the state income tax. Now, part of that is because aspects of that tax would be made retroactive. So you'd be paying tax on income that you've already earned that you didn't think you were going to get taxed on if this measure passes. He increases the income tax largely by creating a number of new tax brackets. So he kind of has micro increases all up and down the line. He also eliminates the $500 credit against your property tax, which you've been able to deduct off your income for the income tax. That in itself is about $370 million in new revenue. And another way in which you're not getting relief on your property taxes that you get right now. So that's the income tax aspect of it. Obviously, I fought the income tax in 1991. I would still love to see us be able to get rid of that tax when time was right. And the last thing I would do would be to vote to increase the income tax this year. Then there's a whole series of small increases up and down on the sales tax. In a lot of cases, the elimination of long-time exemptions. The total is nearly $500 million in increases on the sales tax. Just to hit a couple of the major ones, the largest one is the elimination of the exemption for clothing and shoes $50 and under. That's a tax exemption that we passed when I was in the legislature, in the majority back in 1985. I think it's one that helps the average family, helps people buying clothes for kids. The only reason to get rid of it is you're desperate to give money wherever you can get it. The tax exemption for non-prescription drugs, for aspirin and other over-the-counter drugs, would be eliminated to pick up another $20 million about. A couple that I think are particularly ludicrous are an elimination of the exemption for trade-ins on vehicles. Currently, when you trade in a car, someone says, well, we'll give you $1,000 for your old car, and you buy a new car. They take the $1,000 off the new car price. You don't have to, and you don't pay the tax on it. Now they'd say, we're going to give you a sales tax on that $1,000 on your trade-in, and then we're going to tax you on the amount that you paid for the new car. That's another $40 million in revenue from the state out of your pocket. One that I think is unusually ludicrous is an elimination of exemptions on coupons. If you go in to buy a suit and it's $200 and you have a coupon for $50 off and you only pay $150, currently you only pay a tax on the $150 you pay. Makes sense. Now they're going to say, no, you've got to pay on that whole $200, even though only $150 are coming out of your pocket. And essentially, you have to pay a tax on the coupon. That's a way to get $45 million away from us. They have a new tax on luxury goods, a 3% additional tax on cars over $50,000, suits over $1,000, boats over $100,000. The one that I would be tempted to support on this whole list is the new tax on haircuts. I feel that, well, not really. I don't want to see us tax anything that we're not taxing now. I'll mention a few other taxes that we're going to be facing in this package. Increase on cigarettes from $3 to $3.40 a pack. I'm convinced if we want to get more revenue out of cigarettes and tobacco, we ought to drop the price and get more people to buy them from out of state. I think the more we raise the prices, the more we're going to drive people across the state line. The same with the alcoholic beverages tax, which they're going to increase all the tax rates across the board. They're different on different types of alcohol, but it's going to be a 20% increase on whatever it is that they're charging right now. For those who are concerned about losing alcohol sales business, especially the Sunday sales I think that this, again, is a case where we're going to drive the business out of state. If we really want to make money on the sale of alcoholic beverages for the state, we ought to be like New Hampshire and draw people in here instead of driving them away. We also have a new 0.2 of a cent per kilowatt hour tax on the generators of electricity, not the CL&P and United Illuminating that deliver the electricity, but the people that they're buying from who generate the electricity. There's always this sense that we're not taxing the ratepayer, we're taxing the provider. But obviously the provider is going to pass that expense on to the ratepayer on those electrical bills which are already too high. And the last, and maybe the most obnoxious, although I'd say there's good competition, is an increase in the gasoline tax, an additional 3 cents a gallon, and an increase of 2 cents a gallon on diesel fuel tax. The governor had two choices. He had two choices: raise taxes or cut spending. He's cut spending some prospectively. It looks like the budget we get tomorrow is actually not going to be a cut in real terms from last year's budget, but just one of these cuts in the increased spending. So he didn't cut spending enough to avoid the tax increase. He could try to jack one tax up big, or he could spread the pain across a whole bunch of taxes. He's taken the second option. I think they both stink, but I think this one is going to be in some ways easier to fight because there's a tax on here to aggravate and outrage everybody. So one last thing on this big list is he has created some state taxes that would be mandatory, that would put revenue in the cities, but they could not be avoided. A 3% tax, called a cabaret tax on bars, a 1% hotel tax, a 1% tax on car rentals, a doubling of the part of the conveyance tax that goes to the cities with real estate sales, and tax on planes and boats where they are warehoused. Again, supposedly doing a favor for the towns, not by giving them the option, but by telling them that they're doing them a favor. So that is the tax report. I would not vote for any of these taxes. I think that we have to cut spending, and that will be the focus of my effort, as I've said before, and I believe of the Republican caucus, which I am increasingly happy to be a member of up here. I think it's going to do the right thing. Thank you.